All right, all right. Welcome to Ask the Trader. Hey, I haven't done this in a while. I'm just waiting for a couple of more people to join. Let me test this mic out. If you can hear what I'm saying, go to the comment section for me and go ahead and start typing some of the stocks that you guys are interested in looking at. I'm going to wait for a couple of more people to join before I start. And I'm compiling a list of stocks over here. So I didn't get the list from the room from the post because there were so many posts. So if you're here live, I'm going to reward you by doing your stocks first. So I'm going to go from the top of the chat box to the end. I'm going to try to get to every single person's stock. And what I would also like for you guys to do is when you give me a stock, when I do ask the trader, what I like to do is I like to teach people the bias and the strategy for what they're doing, because that's really why a lot of people are losing money in the market. They don't know if they're investing or trading. They don't know if they're trading or investing. They don't know how long they plan to be in the stock. They don't know how much money they want to make in the stock. So my job is to try to get you guys to understand that this is like a business, right? If you treat it like a casino, it's going to if you treat it like a casino, it's going to be a casino, and it's going to feel like gambling. If you treat it like a business, then you're going to make money in it, and you'll know when to cut your ties, when to, sometimes you got to fold them, right? When you're trading or you're in investing, if you don't have a risk to reward in place, that's chances are that's probably why you're losing money. A lot of you guys spend too much money on particular positions, and you guys don't know how to position yourselves in the market to win. All right, I've bought just about anything, any and everything that's out there, and I've capitalized off of everything that's out there. But I also have lost money. And what you want to do is you want to make more money than you're losing, and that's how you stay in this game. All right, so let me go to the comment section. Let me see if you guys can hear me. I see a yep. All right, so you can hear me. We got Tesla. Happy holidays. We have somebody said good day, good day. Man, it's cold here in Atlanta. You can hear it in my voice. All right. Amazon and Google. I'll go ahead and write those down as well. Tesla. All right. So everyone can hear me. That's great. That's great. That is great. So this is an interactive session. So you can interact with me by putting your questions or your concerns in the comment section. So learn how to use the comment section, or just sit back and relax and watch. All right. So I'm going to perform what I call a magic show. I'm going to make trading and investing so easy, you're going to want to fire your teacher, right? That's just what I do. Let me go ahead and start. Let me go ahead and pull up my screen, and let's go ahead and get started. All right. Here we go. All right, so my name is Joel Harrison. Everybody knows me by my business, which is What Would Joel Do? And I'm a full time day trader. I'm an expert in stocks, options, futures, and cryptocurrency. A lot of you guys have been in my room for years and you've never seen me do a presentation, which is crazy to me, right? Because I have so many free products that are at the top of the page. I'm probably the most transparent trader, investor you're probably going to come in contact with. And that's what we don't have in this business today. There's a lot of teachers and then there's a lot of traders, but you don't get trader teachers. You don't get people that are showing you what they're doing. And it kind of makes you wonder if the strategy that they're using is sound, right? When I lose money, I tell you guys when I'm losing money. When I make money, I tell you guys when I make money. And when I'm making money, believe me, I get a lot of hate from all types of places. All right. I try to be as transparent as I can be, because when I first started investing in the stock market, I didn't have anybody like myself. And I said, man, I wish that there was somebody who could be in the trenches with me, who's not afraid, who has balls big enough to make a call and stand by that call. And if that call loses, so what? Because if you learn how to lose in this game, that's how you're going to continue to be in this game. All right. And I try to lead by example. I get a lot of hate from it because it's different. It's why you're showing this and why you showing that and why you talking about this and why you talking about that, because it's needed. We've been following so many people just off of, with social media. We've been following a lot of people not knowing what they're about, just like the FTC crisis that just happened in crypto, right? If we had just done our homework on, the people that are handling these funds and the trades that they were making, then people wouldn't make mistakes. They just think, oh, because they have all this money, they must be legitimate, right? Because they have this class, or or because they show you, what they're driving in, oh, maybe they know something, but they're not showing you what they do. All right, so I am a full-time day trader. I'm an expert in stocks, options, futures, and cryptocurrency. If you've been in the room, you've seen me place trades over the last 10 years. I have over 25,000 hours of trading and investing experience. And anything that we talk about today are the opinions of Joel Harrison. I want you to do your due diligence. That's why I do these sessions, not so you can go buy my products, right? I do this so that everybody else can see the market just as easy as I see it. Trading and investing is dumb easy. Anybody that tells you that it's not easy, they don't know what they're talking about, or they don't know what to look for. All right. I know what to look for because I've been in the trenches. I'm a full-time day trader. I've been doing this for over a decade. All right. So I understand the market. I see why things are happening, and things can change. If you've been watching my videos from a year ago, things have changed in a year. You can't go by some of the things that I told you to invest in a year ago because the world has changed. And if you don't change with the world, right, you're going to get left behind. Everything isn't the same all the time. That's why I don't recommend books. I only recommend books that teach fundamentals like support, resistance, trend lines, Fibonacci retracements. I don't recommend books where people talk about how they were trading or investing, because things have changed in the last 10 years. Books have become obsolete because the market has changed, right? The platforms have changed. Crypto is only, a decade old, right? So I try to put out the word that you got to stay in the know. You got to be in rooms like this so you can know what's going on. And we're going to talk about a lot of the things that I look at to trade and invest in the market, so you guys can learn how to know when the bias is there, when to get in, when to get out. All right. So welcome to Ask the Trader. All right. This is the Christmas holiday edition. I'm going to teach you guys about high level simplicity. Everything that I do is fairly simple. I can teach it to a fourth grader. And that's not to say, oh my God, you're not smart enough to do it. It's just that if you guys don't understand support, resistance, trend lines, volatility index, 200-day moving average, 200-week moving average, average true range, chances are you can't trade or invest. Like, you've been spinning your wheels and you've been blind. You haven't had that other piece of the puzzle that will allow you to know when to make certain decisions. So I'm going to break everything down in its most simplistic way. All right, we're going to learn about the what would Joel do method. All right, there's if you go to YouTube, you're gonna see videos. You're gonna see the "What Would Joel Do" method video. It's there for free. I don't charge you for it, right? Go there, watch what my methods are. I always teach the what, when, where, why, and how method of buying things. If you can't answer these questions, then you shouldn't be buying or selling anything. What, when, where, why, how? What am I buying? When am I buying it? What platform am I buying it on? Shoot, why am I buying this? And how am I buying it? If you can't answer those questions, then chances are you shouldn't be buying it. And most of you guys are missing 2 or 3 of these questions every single time you hit the buy or sell button. All right. Again, go to my What Would Joel Do page on YouTube. The videos there are free. At the top of the room, I have videos there that are free. A lot of people can watch my free videos, never take a class from me, and learn 99% more information that they'll ever get from any class that they go in and take this involving the stock market, because I break things down in its most simplistic way. The problem is I break it down I break it down so much that people say, this is all I need to know? And I'm like, yeah, anything outside of that is just you wanting to educate yourself. And everybody's going to go through that cycle where they're going to try and learn everything. All right. There's over 2,000 indicators. I've learned all of them. Right. And I've broken it down into about 3 or 4 that I use. And then, I use it every day, and I've been totally consistent. You can go back and look at videos from 10 years ago. I'm very consistent in the way that I see the market. I don't change. I might add something here or there every 3 or 4 years, something small. But for the most part, because I teach price action is going to be the same 50 years from now, because once you learn price action, the market can change around you and you can still understand momentum and bias. All right. So again, investing is a lifestyle also. Everything around you is the stock market. Like people, I laugh at people all the time when they're like, the stock market is a casino. I'm like, well, the stock market is everything around you. Every product that you own, everything that you do, everything that you come in contact with on a daily basis, chances are it's a company that's on the New York Stock Exchange that you can invest in. So investing is a lifestyle. You need to adopt it. Quit coming into the room saying, Joel, why are you showing me pictures of this car and that car? I'm like, because you can buy Porsche stock, or you can buy Ford stock, or you can buy Tesla stock, but you getting into your feelings, right? And you got to get out of your feelings and start understanding that every single thing that I post, there's a reason for it, which is why I have a hashtag behind it, which is why I have over 30,000 members in the room, right? That me and Noble have created over the years, because there's a method to the madness. All right. It seems simple to you, but it's very, very advanced. All right. So investing is a lifestyle. Remember that. Wealth is built from investing. It's not built from trading. I ain't never met no trader that became a millionaire from trading. Now, I've seen traders trade and then take their profits and then reinvest it and then make money there, right? But I've never met a trader that just like if you got into this game to get rich from trading, then you're in the wrong business. Trading is just another way of creating another job. I'm going to quit my job and trade like you, Joe. All right, so you quit your job to get another job. So you better treat this like a business. And if you quit your job to do what I'm doing, and you can't tell me anything about support, resistance, trend lines, average true range, Fibonacci retracements, you need to go back to your job, because there's no way you're going to it's no way, because the stock market is about taking money from somebody else. Like, in order for you to make money, I got to take money from somebody else. You got to be in the top 5-10% if you want to trade the way that I'm trading. I'm out there to take your money. So I'm trying to teach you guys how the 1%ers and the 10% think, because we're the ones that own 90% of the market, right? So you got to understand how we think and what we're doing. But investing is how you make your money through 401ks, IRAs, real estate. I keep trying to tell people that. I know the room is called insider trading. I get that. We want to have that skill set to be able to trade. Everybody should have a skill set, not providing a service. Like, I'm providing a service right now. Or if I have classes, I provide a service. That's providing a service, and getting money from people is different than, I don't need anybody. I'm just sitting in front of my computer and I'm out there taking money. So it's a totally different skill set that 99% of y'all don't have. Y'all don't know how to take money and then go make money with it. All right. I had to learn the hard way when I lost everything in the real estate market, and I was forced to figure out a way to make money, because I'm not the type of individual that's going to get hired, right? I like to wear jogging pants and, and golf all the time, right? I'm not corporate. So I had to learn how to create income for myself. And when the real estate market crashed and there was nobody out there to buy real estate, how else was I going to, help to provide money for my family? So over the years, I developed that skill set, and that's the skill set that I'm trying to teach you guys. But that skill set just allowed me to learn how to make money so that I can reinvest those funds. All right. So I can reinvest those funds. All right. Investing is where you get wealthy. I don't care if the market's down 30%. If you look at a stock chart of Apple, Amazon, Google, Facebook, Tesla, they've all been down 50 or 60% on their trek to becoming the largest companies in the world. You know, but you guys don't know how to pull up charts, so you just think that what we're going through now is just this is the one of the worst markets that we've had in a while this year, right? We haven't had a down market like this in about 20 years. I get that, right? But a stock being down 50 or 60% is normal. Tesla is always down 50%. I don't know why you guys are acting like this is anything out of the ordinary. It drops 50%, then it grows another, 8 times, another 8x. All right. So you guys got to learn that by looking at charts. You got to stop being fearful of the market. Fear is good. If the market is going down, you shouldn't be fearful. If you know how to trade, you'll know how to trade to the downside. Use that fear to learn how to make money, right? Even though I'm invested in stuff, people are like, why are you telling people to buy this? Or why are you continually buying stock for your family's account? Because I know 5 to 10 years from now, the stuff that I'm investing in is going to be higher. I know 10, 15, 20 years from now, if I buy real estate in any metropolitan area, chances are it's going to be higher in the future because the market is rigged to go up. But you guys got to understand that fear and know when to buy and how to buy and why you're buying. And why you're buying, you could be shorting the market and making money to the down. I could be shorting Apple in one account, make a whole bunch of money while I'm still long in another account. I can short Apple today, day trading, take those profits and then reinvest in the stock over here. But you guys don't think that way. Okay. So you gotta change the way that you're thinking because you guys worry so much about losing, you can't win. Even during this period, all I hear are negative Nancy's, negative Nancy's, negative Nancy's, right? The market is doing this. If the market is going down, trade it to the downside. There's gonna be days when the market is up, guys. The market is up. This is a true stat, right? For every 4 days, the market is up, the market is down. The market 75% of the time is going up. 75% of the time is going up. So if you're so negative about the market all the time, I bet you your account doesn't reflect it. All the negative individuals I come in contact with that's in the market, they're not where they want to be financially, right? Because they're so negative about the market, they can't even invest in the market because there's never a price that's low enough unless it's $1. And even when it's $1, they're gonna be like, I don't know if I should invest in it because if it's $1, it can go to 50 cents, it can go to 25 cents, it can go to 10 cents. Right? You worry so much about losing, you can't win. Stop thinking about that. If you're trading the market, you don't have to worry about the market going down. Okay. All right. Yes, I get this. This is a different time, right? So, when things fall in price, I get it. Some stocks may never go back to their all-time highs. But you guys are missing the point. Like back in June and back in October, I was trading the market. The volatility index hit 30. I came into the market. I said, all right, everybody, you need to buy the market, right? You need to buy the market. And nobody understood why. And I said, all right, if the average move of the market, like let's say the S&P 500, if the S&P 500 on average moves 10, 15% a year on average for the last like 20 to 30 years. And I look at my chart and I see that we're at a low. The volatility index just hit 30. And I see a 200-day moving average and I see it 15 or 16% away. Some of you guys are like, the market is bearish. The market is bearish. I'm not going to buy. And I'm like, the average move of the market is 15% a year. You can get 1 year's worth of gains even if we go to the 200-day, and I'll show you guys, when I pull up the charts, and it's just like a regular year without any volatility. But the market is so bearish, and you're hearing people be so negative about the market, you don't know how to make money in the market. So I've made money twice during the lows all the way up to the 200-day moving average, and I'm good with that. And people don't understand you can make money in a bearish market going up. You can make money in a bullish market betting on the market going down. All right. But if you don't understand your strategy or what to do, then you're going to have issues. So I want everybody to at least make a 10-year commitment to this game, right? But you got to change a couple of things. If you need to do a consultation with me, go ahead and book a consultation. I help people all the time set up their accounts, understand what they're doing in the market so that they can have their eyes on the prize. If your eyes on the prize is to retire in 10 years and you're not buying anything right now, then when are you going to buy? If you're not buying anything right now when the market is down the most that it's been in like 20 years, then when else are you going to buy? Right? And you got to think about that. You're like, dang, the market is getting destroyed and I don't even want to buy anything. There has to be something psychological about that. It's because you don't have a plan. And when you don't have a plan, and if you don't have a dollar amount that you're looking at, and that dollar amount growing to a certain amount, and being in companies that can realistically grow that much, and then knowing how to get into it month to month, then yeah, you're gambling, right? And most of you guys are doing it anyway in your 401k. Even if you don't even want to be invested in the market, you got money coming out of your check, going into the 401k at the highs all the way to the lows, and you have no problems with that. But when it comes to you doing it on your own, where you can actually make even more money, you get paralysis by analysis. So you got to make that 10-year commitment, and it takes having a coach or a significant other or someone out there that can be your accountability partner. All right, but investing in trading is dumb easy. Y'all make it hard. Every time I do a consultation, 99% of the time at the end of the consultation, my clients always say, "Wow, I keep looking at this the wrong way." And I'm like, "Yeah, it's very, very easy. It's just getting out of your own way. You're making it hard. The market has been going straight up for the last 100 years with dips, 20, 30, even 50% dips. But if you don't know how to take advantage of it, or if you didn't even know that the market had 30 or 40% dips, then you are the problem and you're making it hard. Look at the last 30 years. This is a chart. Let me take my picture off so that you guys can see the full. Actually, it's on the side so you guys can still see it. Look at this. This is the last 30 years. All right. The market's been going up. This is the 2000.com crash. Y'all remember stories about how terrible the .com crash was, how stocks got so overinflated that the bubble burst and the stocks fell. And for 2 to 3 years, the market didn't do anything. And that was like one of the worst crashes on date to ever happen, right? Followed by the 2008, 2009 crash. Now, back in 2000 to 2003, it took 3 years before the market started to turn around. So yeah, guys, if we're going to have something just as bad as this .com crash, we've already completed year 1. Maybe we have a year 2, maybe this is year 2 coming up, and maybe it can be another 3 years. Maybe it can happen. But what I want you to look at is not the fact that it took 3 years. What I want you to look at is these numbers here. 50%. The market got cut in half during one of the worst times ever. In 2008 and 2009, it took 2 years for the market to turn back around. And that was during the real estate financial crisis. But check out this number. 50%. 50% here, 50% here. During the 2018-2019 crash, it took a year for the market to turn back around, but the market only dropped 20%. During the 2020 pandemic, the market dropped 35%. We were about 15% away from having one of the worst crashes like 2000 and 2008 and 2009. And right now, guys, we're sitting at about minus 26%. So can the market fall another 25%? Yeah. But what you guys, because I pulled up a chart and I looked at this in literally 1 second, the number was 50%. I'm like, okay, the worst case scenario is another 25% down from where we are right now, because 50% here, 50% here, 35% here. We've already been down about 30. So we got down to about what the pandemic was. But even if we come back down, I've already calculated it for you guys. If we drop 50% from where we are right now, guess where we're going to go to? Back to the lows of the pandemic. All right. So in my mind, I already have a pretty much an all-in area. I got an all-in area that I'll probably go in at, but I can see it. And it doesn't make me, I don't feel so afraid anymore. Right. Just knowing where the market can go. A lot of you guys are like, oh, 25%. Nobody has shown me this. I'm taking a class right now. It costs $10,000 and ain't nobody pulled up this chart because the teacher that's teaching you is making money off classes. They ain't making money off this. I keep trying to tell y'all 99% of the teachers that are out there ain't trading or investing. They're making money off of you. All right. But they look like they know what they're talking about, because if you don't know what they're talking about and they're teaching you something, they're leading you astray. And I know I get negative when I talk about stuff like that. It's because 99% of teachers out there are terrible. They're terrible. They don't know what they're talking about. They're not teaching the basic fundamentals of understanding the market, right? And that's where I come in. All right. And no, I don't. And let's get this story out. Like, I got a lot of people that come in the room talking about Joel just be cursing out his students and his clients. No, I don't. Where you get that? Where you hear that from? I ain't never once cursed out any of my students or my clients. Like, my students are kids. You think I'm really at a school like cursing out these kids? Like that's just haters coming out that see something that I'm doing that's positive, and they're trying to shut me down, right? Because I will tell you how it is. Now I am, my bedside manner is a little bit off. I'm going to tell you how it is. If we're doing a consultation and you show me your portfolio, I'm going to say, why did you do that? And that feeling that you get that makes you feel like, dang, I really wasn't approaching the market the way that I'm supposed to. That feeling that you're getting is what makes make me feel like I'm mean, because you decided to gamble in the market, not me. My job is to say, look, all the people that are around you, all because most of you guys are ballers, and y'all be out there doing your thing. So you're not used to anybody you're not used to another millionaire telling you, what the hell are you doing? So the fact that I'm doing that, it makes you feel some type of way, right? And that's what coaches do sometimes, in this day and age, anytime somebody's feelings get hurt, it's supposedly wrong. Nah, a lot of you guys need to look in the mirror and say, what the hell have I been doing for the last 10, 15 years? My portfolio doesn't show the amount of money that I think that it should have, right? I'm trading and investing totally different. I'm spending more money on classes than I'm doing investing. What the heck am I doing wrong? Which is why I tell you guys to come to me. Everything's cheap, everything's free. I'm going to tell you how it is. And then if you want to take that class, then you possibly can. But I'm going to stop ranting because I was waiting for a couple of more people to join. It's 11:30, so I'm going to go ahead and get started. All right. Again, there's a method to my madness. All right. So if you haven't downloaded my app, go ahead and download it. It's free. There is a membership service that's there. Go ahead and do it if you want. If you want it, I'll show you what I'm buying, what I'm selling. I also put out alerts when I'm trading during the day. Stock stars. If I see unusual options activity, I'll put that out there as well. There is an ultimate membership service. So for anything that I'm learning, like let's say you want to take a class on futures, come and take my class first. Learn the fundamentals of it before you decide to pay 15 or 20,000 for another futures class. Right? It costs like $50. Most of the time, futures might not even be your thing, which is funny to me, because I'm like, you might not even like futures, or you might not even like options or crypto. Watch the session, watch the class, see if you even like it. Do a consultation with me. I'll explain to you what it is. Then you can go take your $1,000,000 class. But I see so many of you guys take the classes and then you come to me afterwards, right? Stop doing that. Come to somebody that's reputable, that knows what the market is first, so I can help you or help guide you in the direction that you want to go. And I know a lot of you guys got money that you just got burning in your pocket. I get that, right? But a lot of people join the ultimate membership service so that they pay $50 a month, and you have access to every single video that I have, any webinar week that I have that I put out there. You get free entry to it. So take advantage of it. It's cheap. I'm going to show beautiful charts today. There's not too many people out there, except for maybe Noble, that has charts that are as beautiful as mine. All right. If you want your charts to look like mine, you can always go to payhip.com and download this Thinkorswim chart setup, because that's the platform that I'm going to be using today. And you'll be able to make your charts look like mine. Again, go to my YouTube page, subscribe. If you don't like a video, put don't like. But it's rare because everybody likes my videos. All right. And again, if you need to take futures or stock or technicals or options, you can go to my PayHip. Probably in about 30 days, I'll put the advanced technical video that I just did last week during webinar week. There's a new stock party that you guys can do. And if you missed webinar week last week, message me through What Would Joe Do. For $75, you can get access to all of the webinar week videos that I did and the bonus videos that I provided for everybody. All right, so let's go ahead and get started. Let me get out of here. Bam, let's look at some charts. This is what you guys wanted in the first place. Dang, Joel, just teach, man. I don't want to hear about all that other crap. Show me a stock. All right, we good. All right, let me change the banner. Let's make it look a little Christmassy. I'm gonna go ahead and use this green overlay. Y'all know about that. All right, and let me look at some of the comments that are out there. Let's go back to the beginning. So let's look at y'all want to look at Tesla. Happy holidays, Clara. Let's go ahead and look at Tesla. So when I pull up Tesla, very first thing I want to do, when I pull up Tesla, I want to know the bias. All right, you guys are looking. All right, so when you're looking at my charts, I'm just going to tell you in the beginning, if you see a yellow line, this is your week chart. So you don't have to keep looking up here. If it's a solid yellow line, I'm looking at a week chart. I'm looking at the overall bias of the market. Noble, I actually started using the week chart a lot more because Noble was using it, and the week chart is being used a lot more now because the bias has changed. The market has been going up for 10 years. Look at this. Tesla has been going up literally. This is what year is this? 2000 and hold up. 2019. All right. But as you can see, the bias has been up. On this week chart, anytime you bought, as long as, and this is the rule, if the 200-day weekly is angled up, then the bias is up. If you see a 200-day that's angled down, then the bias is turning down. Well, if you notice, the bias is still up. Now, the best time to buy a stock usually is when you have a 200-day that's where the bias is up. Usually is when it hits the 200-day. So you had a lot of people that came in and they started buying Tesla around the 164 range, and now it's at the 123 range. But before you even buy something like this, you should be asking yourself questions like, how much is Tesla worth? So I always tell people to go to Yahoo Finance and to get an idea of what the PE ratio and what, how much the market cap is, right? Tesla right now is a $400 billion car company. Y'all know that there's no other $400 billion car company out there. And at one point, Tesla was $1 trillion in market cap, which is obscene to me. The second place was like 250 billion, which was I believe Toyota. Think about it. Toyota is 187 billion in size. Porsche is 16 billion in size. Y'all see that? Porsche is 16 billion in size. A lot of you guys don't know this. But what I do like about Porsche is Porsche offers a 5% dividend. That means they pay you whatever you have invested. If you got $10,000 invested in Porsche, you're gonna get a check for $495 every year. But that $495 is cut up in 4 pieces. So let's just say it's $500. Every 3 months, you're gonna get a check for $125 for every $10,000 you have invested in Porsche. but the company is only worth 16 billion, where Tesla is worth 390. That don't even make any sense. That's why you see a lot of people starting to sell Tesla, because at one point Tesla was just as big as Porsche is right now. And then all of a sudden it became this behemoth and it got overpriced. And I told people that, like, like, I love Teslas. Look, I own two Teslas. I drive a Tesla every day. I love the car. I even love the CEO when he's not, when he's not manic, right? But the stock, I sold my stock a long time ago and I bought Teslas with it because I knew it was overpriced. Once it hit $1 trillion in market cap, I knew where it can go. When I saw Tesla go from 25 billion to 100 billion, that's 4 times my money. I had to decide, is this where I want to get out at? And when I made 4 times my money, I decided to stay with the company because I was investing in it over a 4 to 5 year period. Once that 100 billion turned to 1 trillion, the next 10, and I look for 10x. 10x is 10 times your money. If you put something in something, like if I look at Porsche, or let's say I'm looking at Ford. Let's say I was looking at Ford and I'm trying to compare it to something like Tesla, and I see that Tesla's 400 billion and I see Ford 40 billion. What's more likely to happen? Is it more likely that Ford can go from 40 to 400, or is it more likely for Tesla to go from 400 billion to 4 trillion? Realistically, what's probably the better investment? Which is why I keep telling people to buy Ford and General Motors, because Tesla market cap is huge. And a lot of you grown adults don't even notice. And now you're getting that little feeling inside. Joel is so mean. He's making me feel like I'm just not that smart. It's not. It's just you didn't notice. You didn't know anything about market cap because they don't really talk about market cap on TV. All you see is stock price. You don't know that stock price is attached to a market cap, and that and you make your money from the growth of that company. You don't, yeah, the stock price can go up, but it's based off of that value you see right there. In order for you to make 10 times your money on Ford, Ford would have to go from 40 billion to the size of Tesla right now. I can see people making that argument because they're like, okay, if Ford has the F-150 and it's the best-selling vehicle on the planet, and it just went electric, and now they have other electric items coming in, and at some point they're going to become profitable, off of these electric vehicles. Maybe the valuation of the company can reach the same valuation as Tesla. But if you're buying Tesla right now because you're looking at the stock and you're saying, you know what? Tesla's only $123 a share. One day it might be worth $1,000 a share. Then you don't know how to invest, because that's not how it works. In order for this to go from 123 to 1200, this has to grow 10 times its value. That means you need $4 trillion, which is 4 apples, to invest money into Tesla in order for it to grow that size. It's not a realistic thing. It's not realistic for that to happen within the next, I don't know, 5, 10, 15, 20 years. So you see a lot of money coming out of these growth companies. If you notice, the Apples, the Amazons, the Googles, y'all are like, why is everybody selling all of these stocks? They make so much money. It makes no sense. Because they're trillion-dollar companies. And you're expecting it to go to 10 trillion. But the stock is only $89. You're telling me, Joel, it can't go to 890? It can, but in order for this to go to 890, this has to grow 10 times its value. If you didn't know that, you've been gambling. You've been spending money in the wrong areas. All right. All right. So let's look at Tesla's chart. Now that we got the bias for Tesla, and I only do this one time because I want y'all to understand how my mind thinks. Let's look at the week chart. The week chart shows you that if I draw a line here, I can pretty much tell you where the resistance area is going to be for Tesla. If Tesla starts to rise in price, it's going to have problems at the $250 area. Joe, how did you know that? Can you just see the future? Nah, it's because I drew this one little line right here that y'all refuse to learn how to do. Or if I drew a line here, how did everybody know to short it right here and short it right here and short it right here? Because we learned how to draw these lines. How did we know when it broke this line it was going to fall? And how did we know where it was going to fall to? Because I drew 3 lines on my chart. 3. Y'all got 15 indicators, can't figure out what to do. I drew 3 lines. Learn how to trade a clean chart, and you will become better than any trader in your family. Dump all the indicators. Quit trying to learn everything. I know you guys are smart. You're capable of digesting a lot of information, but if you don't learn the fundamental basics of the market and why things work, it doesn't matter how many indicators you use. I use at the most 1 to 2 indicators per strategy. I don't need more than 1 or 2. I can trade my chart with nothing on it better than anybody out there that has 27 indicators. Because if you look at this, where does it look like it wanted to go to? It's clear as day it wanted to go here. If you were trading Tesla and I was using a 200-day moving average, when did Tesla start to become bearish? A lot of you guys don't even know. I don't know. I guess it was when Elon tweeted that he was selling shares. Well, you could have looked at this chart and you could have made money on Tesla for the last, I don't know. I'm going to take these glasses off. You could have made money on Tesla from 2020 all the way until pretty much now, just by using one little strategy. What's that strategy, Joel? Just buy when they hit the blue line. Joel, it can't be that easy. It is that easy because that's when I was doing it. Yeah, but that's just Tesla's chart. It doesn't happen like this on every chart. And I'm like, yes, it does, because it's price action. You can't change something that goes up and something that goes down. A stock is either going to go up or down. I want y'all to understand that. You got a 50% chance of making money. It's going to go up or down. It's going to go up or down. When it goes up, it's going to leave a trail to tell you that it's going up, and it's real money flowing into these stocks. So I use what we call a 513 strategy, showing you guys something for free. The 513 strategy, and why am I giving it? I had a consultation the other day. A guy asked, Joel, why don't you charge way more money for this information? And I said, because why would I charge y'all this type of information? Because like I get that a lot of people they just don't know how to use Google or use Investopedia, which is amazing to me, right? Like like all the things that we're talking about today, you can go on Investopedia right now. You can Google 513 strategy or 200-day moving average or 200-week moving average. And you can go to Wikipedia and Investopedia and it will tell you how to trade this. I know people right now charging $5,000 to teach y'all this that y'all can find for free if you just ask the question in Google. And I hate seeing people lose money on stuff that you can learn for free. I get if a person has a strategy, you're paying for that strategy. But it's highway robbery for me to teach you something that's an indicator that Invest Tools and Thinkorswim offers for free. And they're reputable companies. It's like, and y'all hear the frustration in my voice at why I don't understand why we feel the need to pay all of these other people these hundreds of thousands of dollars on stuff that you guys can get literally for free, right? So that's why I do it. But the 513 strategy, 5813, go in Investopedia right now. It'll tell you how to trade it. So this is the 513. It's the very first thing you learn in trading school. It's the very first thing you learn, the first strategy you ever learn. So when I hear people that don't know about this, I literally want to go find a teacher and wring their neck. Like, why are y'all not teaching these people this? All right, it's a crossover strategy. It's a 513. When they cross, that means things are bearish. You guys could have gotten short on Tesla way back here in February. You could have got bullish again right here. Look, all I looked for was a cross. See this cross right here? Watch this. I'm gonna make it look real easy. Then we're gonna get through everybody's stocks. I promise I'm gonna get to everybody's stock today because I always get to everybody's stock. But y'all haven't heard me rant in a long time. There's a cross right there. Joel, how did you know to go down? Was it something that happened in the news? No, quit looking for the news to figure out how to get into these positions. That was a short. This was a long. Look how easy this is. It stayed long. It stayed long. Then it crossed right here. Went down a little bit, crossed back, went up in price. But what I also love is that when it came down to the 200-day, you could have just bought it there. Every time it touched the 200-day, you could have bought it there. So if you didn't believe in the move, then I always tell people, all right, look for two moves. Wait for it to touch the 200-day. Then when you get a 513 cross, like right here, bam, you get in it. It went down for 3 or 4 days, and then it was off to the races. It happened again right here. Touch the 200-day. Crossed. It gave you some issues, made you want to get out of it. Then it went up in price, 210 to 240. That's a 10% move. Came back down again several times. It played around on this 200-day. Why was it sitting on this 200-day? Because traders like myself know that when a 200-day is angled up, the support is going to be the 200-day. Yeah, every now and then it might overshoot it. But look at this. Look at how many trade, like for you traders that's looking for 3 and 4 day trades, this is what you should be doing. I don't know what the heck y'all be using to trade. I really don't. Because when I trade, it's dumb easy. Look, it just hit it again. Even if you took this trade during a bearish market and you wanted to maybe trade it to the upside, I see that it went down here. I get that. But at least it went up for a second. And look at that. And then it finally started to go up. But it couldn't really break this 200-day moving average until here. But look, it crossed here. But it never crossed back to the upside until it was underneath the 200-day. But look at what the 200-day is starting to do. It's starting to angle down. And then it came back. It tested it. It said, uh-oh. Look at this. What is this 200-day doing? It's now starting to turn down. You should have known, oh my God, there's an issue when you started seeing this turn down. What date was that? That was back in August. August. Not November of 2021. Y'all should have known the market was turning on. You didn't know that. Tesla was bullish all the way up until August. Then it started to go down. Look at that. It crossed underneath it. Very, very easy. Understand it because I'm understanding bias changed. Now I can't expect for it to work every time it hits the 200. The 200-day is angled down. Yeah, but Joel, but didn't you say? But look at the week chart. Look at what it's doing. Yeah, the week chart is angled up, but we're not talking about investing in Tesla. We're talking about trading Tesla. There's a difference. A week chart is going to always show you something different than a 200-day, which is going to always show you something different than an hour chart, which is why you guys should not be looking at 12 different charts for one trade or one investment. Use the week chart if you want to invest long term. Use the 200-day if you're trying to trade maybe a couple of months. But look, you should have known to get out of this stock right here. It's clear as day. Clear as day. Okay. Clear as day. And now it's bearish. But Joel, I want to buy it now. Are you buying it as an investment for 3, 4, 5 years? Or are you trying to make money in the next 3 or 4 months off of some options that you bought? Oh, I was trying to make money in the next 3 or 4 months. Well, the bias is down. What, you going in the wrong direction. But can it turn right here, Joel? It can. But why am I going to pray and hope that it turn when I could just say, you know what? If Tesla breaks this trend line, even this trend line, I get it. I'm gonna need to see a cross on the 513. This is bearish until we break through here. But Joel, but then I miss out on it from 122. That's because you're hoping and praying. That style of trying to invest does not make you money. Hoping and praying does not make money. I get luck. You want to be in the right position to get lucky. I get that. You get lucky if you say, all right, I'm going to buy this every single month for the next 5 years because I'm looking at a week chart and it still says that it's bullish. That's how you get lucky. You don't get lucky by looking at a 200-day chart and you see that it's going down. You can if everything is going up. All during these times, you could have said, man, yes, but everything changed right here. Everything changed. Your whole bias, your whole view of the company changes, at least for short term. All right, it changes. It changes. But Joe, didn't in your video 12 months ago, I watched that video. You said buy Tesla. You bought 2 Teslas. I did the same strategy and now I'm losing. Well, I'm sorry, but you should have been losing only up until about August. So if you come to me and you say, Joel, I was losing, I used your strategy, and then I just got out at 300 and we sitting at 122, that's on you. I can say, you know what, you're right. The strategy changed. But why the hell are you still in it at 122 when clearly the what would Joe do method says that when the bias changes, you got to change what you're doing. Don't come to me and don't get mad at the Kramers on TV because you're in something longer than you're supposed to be in it. You need to look in the mirror and stop blaming everybody except yourself. You're the one because you didn't want to learn this. I just went by what the stock picks you gave us. Stocks are not supposed to go up forever. 10, 15, 20. Microsoft went sideways for 15 years. So does that mean that everybody that bought it during that time weren't geniuses? It finally turned around. But if you don't understand your strategy, then that's on you. That's on you. Quit blaming the stock pickers and the stock gurus. Yes, I was wrong up until here. Then I wasn't wrong anymore because Joel Harrison is not in Tesla. I'm not in it. Gone. I'm out. Audi 5000. Why are you still in it? All right. I spent a lot of time there. All right. I promise I'm going to get to everybody's stock. Trying to keep it entertaining for you guys. So if you can't handle the tone, I'm sorry. That's how I keep you guys interacting. All right. So hopefully we're having a good day. Let's look at Amazon and Google. Same thing. All right. We're going to do it quickly this time. Amazon. What is the bias for Amazon? Well, the bias for Amazon, before we even look at a chart, is what? Up. Wow, Joel, how did you create that? That's the bias. What is this doing? Up. What is the bias? Watch this. What is the bias on Amazon? What is the bias of Amazon here? Before we even look at the chart or the stock price, what do y'all see here? Down. Joel, that's just playing Monday morning quarterback. No, it's not. This stock chart started to turn down back in February. And in February, I created a video that said stock renovation. Some of you guys choose not to go to the top of the room and look at the free videos. At the top of the room, it says stock renovation. And when you look at that stock renovation post, it says, guys, the market is different now. I've been telling, investing wise, it's been the same for 10 years. there's been a change in the charts. There's been a change in the momentum. You probably want to start renovating that portfolio, readjusting, and start getting into other companies, sell some things, get into some other things. Why? Because we haven't seen something like this in a very long time. That was back in February. It's now March, April, May, June, July, August, September, October, November. It's been 10 months later. 10 months. It's been 10 months that we've been saying, guys, the market's changed. I don't care about my video I did a year ago. Things have changed. February, March, April. Hey guys, the market's going down. March, April, guys, the bias is down. Couple of times we bought the market and traded it to the upside, but the bias was down. Yes, the overall bias is still up. So if you're in it now, it doesn't mean that you should have sold everything if you're got a 10-year, 5 to 10-year, investing horizon. But if you're trading this, the bias is not up. The bias has been down. Easiest trade. So easy. How do you trade something that's going down? You short it every time it gets to the 200-day. Joe, isn't that the opposite of what Tesla was just doing? How come this is so easy? Because it is easy. So if Google starts to rise in price, we already know where it's going. It's going to what? Look right here in blue, 120. That's where it's going. That's resistance. That's resistance. In a bear market, everything switches. Does it mean that you can't invest in this long term? Nah, because long term, the bias is up. Can that bias change? Yeah. But I'm not going to change my bias until the charts tell me to change. I don't care what people are saying on TV. I don't care about that because for the past 12, 13 years, there's always a doomsday scenario. The dude from the Big Short comes out every single year and say this is the year. He's been saying it for 13 years. I don't care about what they say. I don't care about their opinions because the only thing that matters is money flowing in and is money flowing out. And what is my strategy? Period. If the bias is still up, I'm going to stay with the bias until the bias changes. Maybe I do lose a little bit of money. But if I was sitting back listening to all of these naysayers, I would have missed out on this whole move to the upside for the last decade. My family, we would have never became millionaires listening to people on TV. I don't care about what they say. I care about what they say, and then I look at the charts to make sure that it's the same. I'm like, this don't go along with what you're saying right now. This does though. The 200-day going down. I get that. And then you would have known when to get out. Once the 200 days started to angle down, you had a couple of times to get out when it hit the 200-day. Or if you go on Investopedia and you say, what is the 5-8-13 strategy, which is the first strategy that you learn as a trader, you would have learned that when this crosses right here, you should have got out. You had 3 full days to get in, and you would have made a lot of money, 157 all the way down to about 100. You would have made a 50% return on Amazon. How did you know to do it? Because when the charts turn down, fundamentally, I don't need to listen to what people are saying on TV because it matches it. They're like, the world's coming to an end, things are going down, money's coming out, the 200-day is angled down, the 513 cross. Well, you know what? Maybe they're right. I started lightening up my positions. The only large position I have that's in the FANG stocks right now is Google and Facebook. That's it. I only own 1 share of Microsoft, 1 share of Tesla, 1 share of Apple. I've been out of it. How do I know this? Let's look at Apple real quick. Same thing. When did the bias start to go down in Apple? Apple was bullish, bullish, bullish. It started to turn down a little bit here, but that was 2000 and no, that was July. But it started to turn down right around here. And that's when I started to feel a little bit of pressure from Apple. 200-day started to angle down right there. When was that date? That was right around August, September of this year. September of this year, which was 3 months ago, you should have been lightening up your positions for Apple because you haven't seen a downward sloping 200 in Apple for a minute. So we already know where Apple can go to. When Apple started to go up, how did we know to sell it at 156? Because Joel keeps it simple. He keeps it simple. The 1%ers know where to get out. If you're listening to the other 90% that think they know the market, you're not going to see the market for what it is. You're just not. Okay? That was a very simple, easy, basic short. 200-day angle down. We knew that the resistance was 200. And if you didn't want to get in here, you knew to get in right here when this crossed. I'm going to show y'all this on every single chart like a magic show, and you're going to get angry. You're going to have this feeling in your chest like, I can't believe I didn't learn this stuff, this basic, simple, basic stuff. Okay. All right. Came back up. But what is it struggling trying to get through? It can't get through this 200-day. It can't get through it. It's struggling. And it's going to continue to struggle. So if you're a trader, I don't care if you trade to the upside off of a stock tip, but at least know that you should be getting out there. If you got strike prices, you options trader, if y'all got $175 strike prices for the next 2 or 3 months, then you don't know how to trade unless there was maybe some unusual options activity there. But if you're just buying it because, hey, I'm just going to buy it out of the money because it just looks like a good number to go to, or you're going to buy an options price that's at the all-time highs in the next 12 months, like, I don't get it. I don't understand it. Like, I just don't. I'm going to always frown because I'm like, it's like, I can't believe 5 and 6 and 7 figures are being invested in some of these strategies that have no strategy within it. There's no strategy behind it. Like what's the strategy? All right. And you got to ask yourself that. Write down your strategy. This is what I do. This is how much I want to make. This is why I want to make it. The what, when, where, why, how. If you can't answer one of those questions, it's probably an issue there. Book a consultation with me. Let's talk about it so that you guys won't continue to lose money. All right. We looked at Amazon. Oh, we didn't look at Google. All right, let's look at Google. Let's look at the Googs. All right. I'm going to do this every single time. What's the bias? Down. When did the bias start going down? Well, we did look at Google, Amazon, Apple. But yeah, it was in May, went down. Check this out. It's just been sitting in a channel. You could have drawn this line. When the channel broke, you had a couple of places it was going. If the 200-day is angled down and this crosses, you have to say, where is it going? What, when, where, how? What? Google. When am I buying it? When it crosses. Where is it going to? Here. Why am I trading it? To make money in about 5, 6, 7 days. How am I trading it? On whatever platform you're on. See, what, when, where, why, how. What am I trading? Google. When am I trading it? Right? Am I trading it during the day? Why am I trading it? Because I want to make money to where? I just want to make a whole bunch of money, Joe. That's not a sufficient answer. Where are you trading this to? Oh, I don't know. Well, then pull up a chart. I don't know how to use charts. Then you shouldn't be trading. But Joe, I got a job. I got a 9 to 5. Then you shouldn't be trading. Or you need to trade with paper. That I'm gonna get up at 9:30 every morning and place a couple of trades, and then I'm gonna come back at 4. That only works for a little while when you kind of got the trend right. And I always tell people they're pretty lucky when they're doing it. You can't consistently do that for the next year, 2 years, 3 years. Joe, you don't know what you're talking about. You just hating. All right, show me a trader that's done it for a full year, and I'll shut my mouth. Show me a trader that's willing to open up their books and show me what they've done and their trades, and I will shut the hell up. But it ain't happening because that's why I stay in business as a consultant, because this is what you grown-ups are doing. because it's the lazy way of doing it. It's lazy to be like, I gotta, it's all right. I'm gonna use a different word. All right. It's easy to do it that way. I got a surgery, Joel, at 10 o'clock. I'm very, very smart. I have an IQ of 145. I'm a millionaire. I have discretionary income. I can throw $15,000 in an option. Well, don't be mad if it loses, but you're still gambling, Mr. Smart Man. You smart. I get it. You got money. I get it. Or she. You're still gambling. And you're gambling because you got discretionary income. But what you're doing is not a solid strategy. To be honest, that $15,000, if you were doing it the right way, can help you retire from that high salary job that you have. But you're not willing to put in the work to understand these charts and understand that you're gambling. All right. Anyway, Google broke this channel. You would have known when to get in here. This is kind of late. You can get in again, wait for another cross. But Joe, why would I take this trade way down here? I don't know. I wouldn't. But if you were, you still could have made money here. And then it crossed again. Right? But you can draw little things on your chart to help you. Like if I knew that this 200-day was angled down and I wanted to be a trader and I was using the TTM trend, I could have easily just drawn lines right here. Short, 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 short. Look how many times I would have won. Short, short. I would have lost right there, right? Even if it was to go up and then broke this trend and I bought it somewhere right here and then it went down. It was winning here. Even if I drew a line right here and it broke this trend line and it started to go down, how did I know to go down? Because the bias is down. But hold up, Joel. Well, watch this. You can also do it to the upside. What? Yeah. Same person is sitting there shorting every day. That's why I say bulls make money, bears make money, pigs get slaughtered. You could have drawn a line right there. You would have made money. You could have drawn a line right here. You would have made money. You could have drawn a line right here. You could have made money. You could have drawn a line right here. You would have made money. So the same amount of times you made money to the downside, you could have made it to the upside by drawing little simple lines. Hold up, Joel. It can't be that easy. Yeah, it could have broke this trend. You could have put your trade on at 9:30 and you could have been making money. You could have broke this trend, put in a trade, wait a couple of days. You could have done it here. You could have done it here. Let's see if you could have done it here. Maybe that could have been a loss. That could be a loss, but that's because the trend is down. When the trend is down, the trades are easier to the downside. They're not going to be easier to the upside. I keep telling people that, but these are trading. This is trading. This is not investing, because if I was investing in Google, the bias is up. I'm confused now, Joel. Why would I want to buy something that's going down? Because you've mixed trading, investing. You've mixed it into one thing. But one chart is down and one chart is up. I don't know what to do, Joel. What's the goal? I want to make money in 5 years. Fine. Is the bias up for 5 years? Yes. Well, don't you want to buy it when it's low? Yes. But can it go lower? Yeah, but you got 5 years to recover and you got time to put money in it as it starts to go lower. You can dollar cost average. But I'm losing money. You're losing money now. That's what investments are. How many investments have you ever made in your life where you immediately start making money? I don't care what house you bought. Most of us always buy our houses at the highs. And then we got to wait 5, 10, 15 years for it to go up. Most of us, when we start a business, we got to wait 5, 6, 7 years before it starts to make money. Anytime we get a new job, it takes about 2, 3 years before you start moving up that corporate ladder. But then when it comes to the stock market, y'all need to see immediate gains. When it comes to the stock market, grown-ups just, I don't, every other aspect of life we approach it in one way. The stock market, straight gambling, straight casino. And I'm trying to teach you guys how to figure out if you're trading or investing. All right. The bias is up. So if you want to buy Google, buy it. Keep buying it as it starts, even as it goes down, because at some point it's gonna turn around. Now, if you want to know when to kind of like buy it, that's when you look at the volatility index and you wait until it hits 30 or you wait till it hits 50, right? Or you just simply look for support areas you may want to buy it, right? You might want to buy Google here, right? Or you want to go to the COVID lows and you say, you know what, these were the COVID lows. Well, that's where it looks like it wants to go. So don't be surprised if Google goes from $89 to 52. To be honest, I'm going to put an alert right now. So that when it gets close to it, I'm going to say, dang, why did I get an alert? It might be a year from now, 2 years, 3 years from now. This alert's going to go off. And I'm going to say, why did this alert? I'm going to look at my phone. I might be on the golf course or on the beach somewhere. I'm going to say, why did this alert for Google just go off? Then I'm going to pull up my chart and I'm going to say, oh, man, I never knew in a million years that it was going to go back to the COVID lows. Maybe I should buy some. Okay. Then I'm going to look at the volatility index. And if I look at the volatility index and we hit that low and I see that this volatility index is above 30 or above 50, if it's above 50, I'm going all in. If it's 30, I might use it for a trade. Okay. All right. That volatility index is going to tell you when something catastrophic or cataclysmic has happened. All right, cool. Someone asked, Clara said, can we still schedule one-on-ones with you? Yeah, I never stopped doing one-on-ones. Never stop. I mean, if I stop, it's for like a week or two. I might have a golf tournament. Golf season is usually during the summertime. So, I play a lot of golf during the off season. Did extremely well this year. All right. But yeah, you can schedule one-on-one consultations with me through the What Would Joel Do Messenger, or you can go to Joel at whatwouldjoeldo.com. Newton said, you wearing shades indoors because your fur is so bright. All right, that was my swim coach back at Howard University. So what's up, Newton? What's up, Mr. Jackson? Had a Facebook user that said, happy holidays. Clara said, well, thank you for this, Joel. Terrible. I assume you were talking about the teachers that are out there teaching y'all terrible strategies. Terrible. All right. Someone said, not your job, you're giving back. Oh, okay. Talking about, what I'm doing, why I don't charge so much, why I kind of want to get you guys the right state of mind and know what to look for. Kale said, what's up? What's going on? All right, cool. We got a stock. Let's look at Eve said, let's look at Equix. I don't know if it's I'm gonna always assume this is for an investment. So we're gonna do the same thing. We're gonna look at it on its Equix. All right. So first off, I don't know anything about this stock. I do know that short term, the bias started to turn down in March. All right. Do you guys see this? It started to turn down in March right here. All right. This is when the bias started to change. That's a terrible arrow. That's when the bias changed. Short term. Now, just by looking here, what are some of the support levels this thing can probably fall to? It can fall to here. That's always a great mark. Why? Because that was the COVID lows, I assume. Yep, that's the March lows. So look at where it came down to, right around that same value. Now, why is it having trouble right now? You learned something today. Why is it having trouble now? Because this is the 200-day moving average. When it's angled down, it acts as resistance. Everybody and their mama started to short, or they got out right here. And if you get a cross, then they're going to short it to the downside. If you want to take the best short you can possibly take, you take it when it hits the 200-day and it crosses on the 513. That's the best risk to reward you can take. Doesn't mean it's going to win. It just means that that's the best risk to reward. Because even if it goes down, stocks go up and down, guys. They come back, they come back about 50%. Even if this decides to go back up, let's say the stock decides to become bullish right now, it'll go here, it'll come down to about the 25 to 50% area, and then it'll start going to the upside. So even if it became bullish, it still can drop from 717 to 600, which is about a 16% drop. Okay, so it can drop 16% and still become bullish, but it's not going to become bullish short term. And when I say short term, guys, that means for a couple of months to a year, until this starts to go flat or start to turn around. Okay, so let's look up, before we even look at it, let's look and see how big the company is. Like, I don't know what the company is, I don't know what beta it has. And if you notice, it's a $60 billion company. For 5 years, this company has been going up in value. That means money's been pouring into it. It offers about a 2% dividend. So this is a pretty decent company. I know nothing about this company, and I promise y'all, I can trade it better than people that work for the company, because I understand the fundamentals, right? I understand that the bias is up long term. It's a $60 billion company. Look at the bias. If I looked at the bias strictly to the downside, or look at the bias on the day chart, this is what I see. You see how the weekly chart, it was up. That means if you want to invest in it long term, go ahead and continue to buy it. Chances are it'll probably be higher in the future. But short term, you should have known, ooh, this is getting ugly. Even if you were late. Let's say you were late on the move and you were just being real stubborn, and you still got out right around here. You still saved yourself $100, even though you were like, I want to make sure the sliding board is for real. Instead of trying, because I know a lot of people, just because of life, you might miss as it starts to turn down. A month goes by, 2 months go by, 3 months go by, and you finally look at your portfolio after, about 3 months. But then when the bias has been down from February until now, that's on you. That's just because you don't know how to look at charts. Like, that's on you if you're losing money in this as a trade. All right. I do not want to frustrate anybody that's in this long term, because long term, it doesn't matter. You're like, Joel, I don't care. Right. I just buy it every single month. Look at the chart. I know it's going to go down in value. It might even come down in this 400 range. But if you're not buying it in the 500 or the 400 range, then that's on you as well. All right. So that's kind of how I look at the charts. Somebody said the rant is back. Yeah, I think this is like the last of the rants for the year. This was a very, very frustrating year. And it wasn't frustrating because, a lot of us portfolios have gone down in value. It's just the decisions I was seeing people make. It was just so obscene. It's the reason why we probably about to go in a recession. It's like all this money that was in people's hands that was just thrown away just because. And look, I lost 6 figures on my very first 2 trades. So I'm no hypocrite. I'm no, and that's the reason why I do this now. It's not so that I can come out and call everybody dummies and not smart. I did it myself. Remember, I've done every bad decision that you've ever made. Now, the only bad decision that a lot of you guys have made that I haven't made is I didn't put all my money. I didn't give my money to somebody else. And I'm not talking about your financial planner or your wealth planner. I'm just talking about, hey, this trader says they can trade. I'm going to give them $50,000. They're going to trade money, and then they're going to give me 20% every month. Woo! I see a lot of y'all doing that. That's a Ponzi scheme. That person don't know how to trade. They taking your money, and then when they got money that's coming in, that's how you getting your 20%. And they gonna keep doing that as long as they continue to get people to give them money. Sorry if you just gave your money to somebody else. That's the lazy way of doing it. When you could just put your money in the S&P 500 or learn what we're doing right here and you're still better off. I see too many of y'all do it. I see people that teach that's still giving their money to other people to trade to try to make 10 or 20% a month. Now, unless you're staking your crypto, which I get, and you're doing it on a very reputable platform, I get that. That's kind of the same thing, getting a dividend, staking your coins. I just staked my Ethereum for 7%. So on Coinbase had an offer where they guaranteed me 7% if I staked my coins, which is kind of like a dividend. And yes, I can lose the whole entire thing. I understand that. But at least I know that before I do it. But it's not like an individual. At least Coinbase is a reputable company that you can invest in on the stock market, the NYSE. This isn't cousin Frank that's freaking trading my money that just took a class and now all of a sudden they a trading guru. But y'all do that. I'd rather y'all lose the money on your own. All right. So the rants are back because I hear the horror stories every single free. Me and Noble hear the horror stories every other. We've heard every story known to man. And we're trying to get you guys educated so that you don't make the same mistake. What's going on, cuz? All right, so stay true, stay strong and long. I try my best. Can I say I missed your wisdom and rants? I know I can go on a tangent and I can go on a rant fest, but just know it's out of pure love because I don't want you guys to make so many freaking mistakes that are out there. Somebody said Merry Christmas Kwanzaa been adding Altria to the long term. All right, so let's look at Altria. So Altria is like more like it's the cigarette company, which is MO. Now, guys, uh, during a recession, alcohol companies and cigarette companies do very, very well. Now, Altria also started to do well back in the day because let me go ahead and erase all of the stuff that's on my charts because they got into cannabis. So let's look at the bias. I always do that. Look at the bias. What's the bias say? Down. The bias is down. Long term. Y'all see that? We haven't seen a long term week chart go down yet. So that should have told you something. When you see a week chart turn down, there's a problem with that industry. And the problem with that industry was that the cannabis market started to pick up. So they had to struggle and try to get into cannabis plays. A lot of these cigarette companies tried to get into some cannabis plays so they can get their market cap and people to invest in their companies, but then cannabis got hit, so then they got hit twice. You should have not been investing in this from 2020, October of 2019, before COVID. The bias started to turn down. Nobody should have been buying this company. And to be honest, you shouldn't be in it now. Sorry. I know you've been buying a lot of it, but the bias is down because when the week chart goes down, y'all know it takes like a year or two for this to turn back around. Now, when you add the charts on top of it, bam, that's what you see. Now, when you add the charts on top of this bias, it gives you more information. It says that, okay, if you buy it here, you could have, this is what, 2020, this is March 2020. You would have known when to get out. A year later, you would have known the exact value to get out of this stock because for one whole year, you would have made money and you would have said, Joel says, when this bad boy's turning down, I got to get out even when I'm investing in it because when the week chart is turned down, you do not want to invest in this company, period. Because you can go somewhere else and make money for a year or two and then come back to it. unless you don't mind losing for 3 or 4 years. I tell people that all the time. It's your money. If you don't mind losing for 3, 4, 5 years, then that's on you. This started to turn down in 2019. In 2019, we knew to stay away from this for probably 2 or 3 years. It's 2022, which is probably why you never see me talking about this company. For 3 years, it went down. 3 years. 3 years. Your money did nothing. For 3 years. Why? Because the fundamentals are telling you to stay away. I don't care what people are saying. I don't care the statistics about what companies make. It's not about that. It's about what investors and hedge funds are willing to put their money. I've seen great companies not do anything for years. Microsoft went sideways for 10, 12, 13 years. And then it finally started to go up in value. Didn't mean that it wasn't one of the best companies that are out there. It's just that you don't make money on the operations of the company. You make money on investor sentiment and money flowing into it. Period. That's how you make money. If you try to look at books and look at their cash flow to try to make money off of a stock, you're not going to make money because your stock price isn't based off of a calculation. It's not based off of if you sell this many Apple iPhones and your profit levels are this, your share price is going to be this. That's not how the stock market works. It's humans that are buying it off of emotions. It's sentiment. Investor, y'all, and go Google it. Investor sentiment. So you got to understand the sentiment of the market. The sentiment of this fundamentally is get out. If you're going to be in it, because I'm going to always give you the pros and cons. The pros are if you're underneath this line, you can probably trade to it. You can also buy it at the line. I get it. If you think that it's turning around because it's gone down for 3 years, then maybe it is a good time to buy it, right? Because look, you got a series of higher highs. I get it. If somebody came to me and said, Joel, I don't gamble. I bought this because I noticed that there was some support here and that it was in a channel. You're going to get more respect from me because at least it's not because you didn't look at a chart. It's because you said, Joel, I buy off channels. I saw a channel that was going down here and I saw that it stayed within that channel. And now I see the same channel, the same value. If I go here to here, that same channel is the same channel here. So that's why I'm buying it here, expecting it to go to $60. Then I'm going to clap and say, you know what? You see the market like a 1%er. Because if you're going to take a gamble on something that's pointed down, you better have some strong charts or some strong support that's going to support the reason why you believe that this can turn around. I have other traders that would have said, you know what, Joel? I also saw that it was rounding out. It started to round out here. And what happens is when stock starts to round out, it's called a rounded bottom, it starts to go up. I get that argument, but if the argument is, oh, I was watching TV or I was in this Reddit room and they said that you should go ahead and start buying it because they're going to make this purchase and they're going to make that purchase and therefore it can make their market cap go up. I'm going to say that's great information, but I'll stay away until I start seeing it go up. Look, I love Lucid. I love Lucid, the vehicle. It gets 400 500 miles per charge. 500. I love the vehicle. I've seen one on the road and I was like it's like I saw a famous person. I was like, oh my God, I damn near crashed my car trying to take a picture of it. I love the car. I love everything about it. But when it comes to buying the stock, it's totally different because when I look at Lucid chart looks terrible. Terrible. It's going down. Why do I want to buy? Because Joel, don't you want to buy it? They got all these orders coming in because you're thinking about what they try to tell people to invest in the stock. I'll wait until the money starts to flow in because the money ain't flowing in. The money's flowing out of Lucid. The money's flowing out out, 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 and y'all steadily buying it. I know I came on and I was showing Lucid a year and a half ago, and everybody was talking about how it went from $10 all the way to $60, and you made a 500% return. Well, that was a year ago. Didn't I tell you that the market can change totally in 1 year? What I talked about a year ago is a different sentiment a year later. And if you're trying to read books on stuff that came out 2 or 3 years ago, it's obsolete now. Especially when it was talking about how we got this electric car revolution and they're going to be during a bear market. Don't nobody care about all that. It's going down. We're lower than the price that it was when it IPO'd. It's low. Now, if you want to buy it because you believe in it, just know that you're gambling. I buy Lucid for my kids all the time because I'm like, all right, I'll throw $300 in it, $400, $500. If I lose the $500, I lose the $500. If the $500 decide one day to go back to 60, that 500 can be worth a 5,000. There is a strategy behind why I put 500 there and a realistic number. Well, Joel, where did you get 10 times its value from? Oh, it used to be 60. The stock used to be 60. It's 6. 6 times 10 is 60. That means 10 times whatever I invest is what I should make. But but it's $6 a share, and Tesla's $100 a share. So can it go to 100? Can it go to 1,000 a share? I'm like, where y'all get these numbers from? Maybe it can. Let's go and look at how much it's worth. So if I go and I look at Lucid and I say, all right, can Lucid go to $1,000 a share? Well, first of all, $1,000 a share divided by 6 means that Lucid would have to grow 166 times its value. That means if it's an $11 billion company, the clock. If it's a $11 billion company and it grows 165 times, 11 times, dang it, hold on, 11 times 165. I don't even know this number. What is that? 1.8 trillion or 18 trillion? I don't even know. No. All right, hold up. I did it wrong. Hold up. I did 1,000 divided by 6, which was 166. So if that's 11 billion, that's like $18 trillion. Is that possible? No. Lucid ain't growing at $18 trillion. People? Okay. Maybe 1.8 trillion? Maybe. Tesla grew to $1 trillion. You're telling me Lucid's going to be bigger than Tesla. I can see the argument. Well, Joel, think about it now. Lucid's a better car. Yeah, but Tesla's producing 1 million cars a year. This is the fundamental part. Lucid's producing, 1,000? Yeah, so if it can get to 100,000 or 1 million, then I start saying to myself, okay, now you're starting to think like an investor. Can it get to 1.6 trillion? Yeah, but how is it going to do it? Oh, because the numbers are going to increase 100 times. All right, that makes sense to me now. All right, but I don't see you guys doing that. You're thinking it can go to 2,000 or it can go to 4,000. Y'all did it with your crypto. Look at the crypto. Look at the market cap. I pull up something like Dogecoin, and I want to see how much money I can make on it. Did y'all know that Doge was worth just as much as Lucid? $10 billion. So if it goes to $100 billion, let's say it even goes to $1 trillion, that means this can go to $7 if this goes to $1 trillion. Well, what's the largest cryptocurrency in the world? Bitcoin. Is Bitcoin even $1 trillion? Nah, Bitcoin's 300 billion. So you telling me Dogecoin's gonna grow 3 times bigger than Bitcoin? That's not realistic. This is what you guys do. All right. Next one. All right, so let's look at a 15 plus year investment in VTI and QQQ. All right, so let's pull up VTI while we're on Vanguard Total Stock Market Index Fund. So it's a $1 trillion ETF or index. That's a lot of money. For the last 5 years, it's been going up in value. It doesn't offer year to date is down negative 18%, but it does give a 1.5% dividend. So let's look at the bias. When I pull up the bias for that stock or that index that you guys can use for your you're gonna see that looks like I've looked at this before, which is crazy. Look at this. If you had stayed away when the bias went down, stay away, stay away, stay away. But Joel, look, it started to go down. Maybe you buy it right here. Maybe you make a whole bunch of money, but you're really, really banking on it turning around. Joel's just gonna wait from 2009 to 2011. I'm just gonna wait until I start seeing it start to go up in value. Joel probably wouldn't have bought this until it was way over here at 60. I would have missed $30 to $60. I don't care about this 100% return. I would have waited, got in at this 60 level when the bias started to turn up, and I would have immediately started making money. And I wouldn't have had to sit through all of this terror. I could have been making money somewhere else during this period. Y'all like to sit through this. I'm not sitting through this on a week chart. No, sir. I'm not sitting through that. Okay. And not too many of you guys were going to be able to catch this at 30. I'm not sure a lot of you guys would have been able to do it unless the volatility index hit. Now, in 2009, the volatility index did hit over 50. That's the only time you buy something when the 200-day moving average, 200-week moving average is angled down. The only time you buy something like this is when the volatility index hits over 50, which it did. Okay. So if you bought then because the volatility index went over 50, I understand. If you just bought it just because you're like, oh, it's going to turn around, you're not going to be my investing friend. Okay. You got to give me reasons behind it. Or if you had told me, Joel, I love this index. I love it to death. I understand that it's going down in value. But what I'm going to do is I'm going to wait until it breaks this trend line, maybe go green here, and then I'm going to stay in it until it hits the 200 week. And then I'm going to decide when it gets here what to do. Then I'm going to clap my hands and say that was a solid move. Because at least you knew where it was going, and then you knew where to reposition when it hit that 200 week. Because look at what happened. Why did it struggle here? It's going to struggle anytime the 200 week is angled down. Because even when it came back down here, it retested it. And then once it started to turn back around, it was off to the races. You could have bought it again right here. Joe, how did they know to buy it here? It's like magic. No, it's not. Been listening to the wrong people. Oh my God, I paid $10,000 for a class and nobody has shown me this, Joel. You are a godsend. Could have bought it here. Look at all these times you could have just bought it. When the 200 week started to angle up, the best time to buy it is at the 200 week. And guess where we are right now, guys? We're at the 200 week. Oh my God, Joel. But what is the bias down? This is what gets you guys. This is what gets you. What is the bias on? Well, let's just look at the week. I'm not going to pull up. Well, no, let's do it. I didn't have enough space to put it here. What is the bias on the 200 day? Oh no, the bias is down. Does that mean I can't buy it? No. What I would do personally is let's say this was part of my index, my 401k, my IRA. What I'm going to do is if I really like something like this, when I see the 200 days turn down, I'll tell my financial advisor to hold off on the payments. And all I would do is wait until I see that volatility index. I'll go to the VIX, and anytime we get above 30, I'll say invest everything that I have sitting, in that money market account that's been building. Go ahead and throw that into the VTI if your whole portfolio is sitting in this particular thing. I would do that if you were thinking long term and the bias was up, although you see the 200-day going down. All right. Or I would wait until it changes, because once you look at it here, look at what you know. What do you notice? Everything that I've been teaching you guys today, you're going to see it on every chart, and it's going to make you angry. I'm telling you guys, it's going to make you mad. You're going to get upset. You're going to say, I don't understand how every time this dude gets a stock, it's the same pattern every single time. Like, how did he know? Did he go and tell him? I bet you he has plants. I bet you he has plants and they know the stocks to put in there. So it just looks like he knows what he's talking about every single time. No, I'm teaching you guys price action. If you learn price action, you're not going to use them other indicators you've been using, because it ain't nothing but noise. It's just confusing you. You don't know when to get in. The 200-day started to angle down. Look at this. Every time it hit the 200-day, it struggled here. I mean, almost to the penny, struggled here. And now we're turning back down. Okay. So short term, the bias is down. You could have held it till it got here. It broke that trend. Now it's down. Same thing happened here. It hit the 200-day. You could have held on till it broke that trend, went red on the John Carter, started to go down. Same thing happened here. When it hit the 200-day, you could have held on. Then it went under there. It turned red. It started to go down. Then when it started to go up, you knew exactly where it was going to. Bam, bam. Very easy. But long term, the bias is still up until it changes. I don't care what they say on TV. I don't care what interest rates are. I don't care. I don't care that there's a war in Russia. I don't care about that stuff. I care about, is money flowing in this or not? Y'all make things too complicated. It's very, very simple. If money starts to flow out of it, you will see it. You will see it coming out of it. You will see the 200-week start to turn down. You're seeing it struggle right now. So if you're going to see it struggle and you're going to continue to buy it, when you guys could have bought this, y'all know when these dips probably happen, when the VIX, let's look at these dates. This date was June. This date was October. I guarantee that move right there happened when the VIX hit 30, and this move happened when the VIX hit 30. So when you go and you look at the VIX and you look at June and 30, when you go look at the VIX in June, it hit 30. Y'all see this? The VIX hit June and 30. I mean, it hit 30 in June. And then in September, it also hit 30. That's why you saw a spike in that stock in June and September. It's very, very simple. In the room, I always say when the VIX hits 30, you need to be buying or trading. Joe, you don't know what you're talking about. All right, I'm going to make some money, and it's going to pay for my golf for the whole summer. All you do is golf, Joe, because I told you when to buy. All right, you want to trade like me? Listen. All right, you don't have to take the same trades I'm taking, but it's the fundamentals that I want you guys to look for. All right. All right. Oh, I didn't look at the Qs. Let me look at the Qs real quick. And I got to start getting through your stocks. The Q's starting to go down, guys. Sorry. Joe, you've been all about the NASDAQ. Every single stock in your... I just looked at your stock party from 2020, 2021, and 90% of your stocks were tech stocks, and now I'm losing. You are terrible. Word? This is what the NASDAQ been doing since 2000 and what does that say? 9? From 2009. So you had 2009, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 2020, 2021. For 12 years. Joel's been right for 12 years. You come into the room in November, take a class, put your stocks in, don't pull up the charts, don't look to see when the 200-day starts to angle down. For 12 years, this Joel was driving something terrible. Joel started picking up a nice little whip. Y'all start seeing Joel dress a little better right there. Right? Joel started getting haircuts right there. My golf shoes start to get a little bit better. Y'all wondering why is Joel's everything about what he's doing is just getting better. This is what's happening during that whole time. And I'm just adding and adding and adding. And then this was 2020. No, that's 2018. All these times you could have been buying. Joel kept saying, buy the 200-day, buy the 200-day, buy the Joel, you don't know what you're talking about. Buy the 200-day, buy the 200-day, buy the 200-day, VIX 30, buy the 200-day, VIX 50, buy the 200-day, buy the 200-day, buy the 200-day. When it hits the 200-day, you need to buy the 200-day, buy the 200-day. 200-day starting to turn down. Don't take any of his classes. He doesn't know what he's talking about. Nah, you don't know what you're talking about. But for 13 years, I done made so many millionaires in the room. I hang out with them all the time. And I get mad because I'm like, dang, y'all should be giving me a cut of what y'all made. They showing up in their new rides, new houses, boats. Because that's what happened in the last 13 years. Everybody became millionaires if you were investing in the market 10 years ago, 16 years ago. If you had just been putting $1,500 into the S&P, into the Qs, you became a millionaire in the Qs. If your portfolio, if you were working a 9 to 5 and all you did was maxed out your 401k and you put that into the NASDAQ, you would have became a millionaire in 12 years. How do I know this? Because there's a gang of millionaires in the room that don't say anything. They just sit back and watch because that's what they were doing. They were buying Apple, they were buying NASDAQ, they were buying a bunch of stocks. My portfolio was growing. Everybody's portfolio was growing. We were showing y'all our portfolios. Why y'all always stunting with y'all portfolios? We've been showing y'all the portfolio for 10 years. Where you been? All right, I'm going to finally do it. I'm going to finally do it, Joe. And then this happens. I knew it. Anytime I do something, the market does the opposite. So then y'all double up and triple up because you don't want to lose. You don't want to look bad. You feel bad. But in February, not now, in February, look, guys, in February, March, April, we started telling y'all, some people were coming out in November. You had until May, because the market still, even in March, we came back to the 200-day because Apple, Amazon, everybody was still holding up the whole economy. All that negative news was coming out, and I kept holding on strong too. And I said, guys, I'm not just going to turn bearish after I've been bullish for 13 years. I've seen interest rate hikes. I've seen wars. I've seen this crap before. And they're about to print $1.5 trillion. Joel ain't turning bearish until the dang charts turn bearish. Charts didn't turn bearish. I don't care what super traders that are out there that finally made the calls. The charts didn't turn until November, December to February. That's when the charts changed. November of last year. That's when everybody started saying, spaghetti-o. And we started saying, I don't know what I'm going to do. Then by February, that's when I said, all right, guys, I've been bullish for 13 years. I'm going to be honest with y'all. I'm going to change out my portfolio. I'm renovating. For 13 years, I've made money in the same stocks. I got to make a change. And I was one of few people that came into the room and said, guys, I'm making a change. This is how I'm doing it. I'm selling this, selling that. I'm getting out of this. I remember I sold my Bitcoin in November. I started selling off a bunch of the stuff that I had profits because I started seeing this happen. You should have known that the market started to go bearish in May. We're looking at the Qs because the NASDAQ is huge in the market because the NASDAQ is what made everybody millionaires in the last 10 years. It started to turn around, you super traders, in May, not November. November, the NASDAQ did not turn around. The S&P and the Dow started to turn around. The NASDAQ was still strong like bull. Okay? It just started to turn around in April. That's when I started to get a little bit frightened. It gave you one more time to come up to the 200-day. In June, you remember June when the VIX hit 30, and I said, all right, guys, go ahead and trade. And I made the money that I lost here, I did one final swoop, and then I went back to a 50% portfolio. I tried it again right here. Go and look at my video. The last video I did in October, I think it was, when the VIX hit 30 again. I tried it again. And then just recently it failed, thinking that maybe the Christmas rally was going to get it going. But I'm not 100% invested. I haven't been 100% invested in the market since April. And there's posts that tell you that. I came out of the room. I'm not 100% invested. My members got the memo. I told the room, I'm like, guys, be careful. What was it that I was looking at? It wasn't the news that I was listening to. It wasn't Russia going to war. It was literally because the NASDAQ started to turn down on the 200-day. Because if you looked at it on the week chart, you would have stayed long. And this is what a lot of people were doing. You can't stay long here. You can't. I'll take that back. You can stay long there. You just have to understand what's about to happen. If the 200-day starts to turn down, you know that the NASDAQ can drop 20 to 30%, right? And then you can try to reinvest and try to reinvest and try to reinvest. But the NASDAQ still looks solid. And it's been a whole year. But the 200-day is going to give you a different story. But after this big move to the upside, once this started to turn down, because you haven't seen a steep turn like this in the NASDAQ in a very long time. Even when it turned down here and back here, it wasn't like this. This is a steep over the top turn. This is when Joel Harrison got bearish. Not here, not here, not here, not for the last 13 years. And any super trader that said they knew it and they called it, I always ask them, well, did you make money for the past 10 years? Or have you been a bear for the past 13 years and it finally went your way? Because chances are they never invested in the market. There's a lot of people in the room that just never invested in the market. They think everything is too high. So when the market finally goes down, they're like, I told you. No, you didn't. All right. Why? What was it that you saw the market turning around? All right. And I get on traders like that a lot. So I analyze this with my mind so that you guys can understand, what I'm looking at. So where do we think this can go to? Guys, the NASDAQ can drop all the way down here. I did a chart earlier where I was showing y'all that. The NASDAQ can drop here. And it's going to be scary if it drops there. But we already know it's halfway done. The NASDAQ has already dropped, over 50% of this move. Usually this is a very good area to buy on the Fibonacci chart. Right around here. Okay. So, it looks like it's bottoming out. We also know that we're down about roughly about, I think the S&P was down 20 something percent. I think 26% at the lows. The NASDAQ was down about 37. If it gets all the way down here, it'll be down 56%. Well, y'all remember that post I put out earlier, 50%, 56% is that number that all of the biggest lows, the 2000 dot crash, the 2000, 2001 dot-com crash, the 2008, 2009 recession. They all dropped 50%. So if this is going to be as bad as everybody says it is, we all know where this bad boy is going. Where is it going? Back to the COVID lows. Why? Just because we got to retest it? Well, it can retest it and it'll be a 50% drop, which matches the biggest moves to the downside all, for the last 30 years. That makes more sense to me than people just saying we're going down lower. Okay, why? Are the charts showing that it's going down? Yes. Okay, the charts are showing that it's going down. How long will it take for it to go from here to about here? I don't know. For it to go this move to this move lasted from August to about November. So maybe for another move to get to here, August to November, September, October, November, 3-4 months. That's why I tell people probably within the first 3 to 6 months of next year, if the market starts to sell off, I think that's going to be it. And that's why I put out that post that said, yo, if the market gets to a 50 on the VIX, which is something that we only see every 2 years, it's going to take the Qs down to this low mark here. This should be an all out investing area for everybody. Here, start loading up now because it's going to be scary. It's going to feel like the world's coming to an end. Yes, the 200-day is going to be angled down. Maybe if we get there fast enough, the NASDAQ won't turn around because the 200 weekly won't turn around because if we get to it really fast in 3 months and then we bounce off of it and go right back up, then that 200 week will just go sideways and then start to go back up again, which is why I put out that message that if the VIX hits 50, it's going to start another bull run that can last 5 to 10 years. I hope you guys are getting this memo and getting this call from me. All right. Because I don't have to wait and see it. I'll know that it happens because when I see the VIX hit 50, that's usually when you see a nice little run in the market. Okay. All right. Cool. All right. I'm going to try to breeze through the rest of you guys' stock and questions. All right. Someone said after the downtrend and the blue chips, people need to stay long. Easy money in 5 years. All right, guys. The blue chip stocks are like your basic staples, right? Like your your Coca-Colas and your Heinz, because everybody's moving out of tech. The NASDAQ represents tech. Everybody's moving out of tech and going into companies that they know can weather the storm in case a recession is happening, like a Coca-Cola or a Heinz, and or a lot of biotech companies. So you haven't heard us talk about like the Mercks and the J&Js and we talk about Moderna, but we don't talk about these big pharma companies. Those are the type of companies you want to be in for now. Even oil is a good place to be in now until we get to this little area here. Or if we can get back above this 200-day and start getting this thing to turn back around. Nobody's going to get bullish until this 200-day starts to turn back around. And I don't even see a 513 to the upside. So it's ugly. You guys know that you could have just used this 513 when it crossed right here. You could have been short on the 15th and you could have been making money because when the 200-day is angled down and it crosses, you need to be making money. All right. Someone said, "Hi, Joe. When I purchase stocks, there are for options for order type, market limit, stop limit. Can you explain the difference?" All right. So all stocks, when you buy stocks or if you buy options, there's going to always be a market and a limit. All right. I'm not going to really talk about stop limit because I don't have the time. But a market order just means whatever the price is right now. So if I was to go in right now and I place a market order for the NASDAQ, the market order is going to be 266. But let's say I only have $265 in my account. Well, then I would place a limit order. A limit order means the price that I place or better. So if I was to buy something like this, I would hit the buy button. If I wanted to buy, I would edit this, put like 100. I could buy this right now at market. And when I buy it at market, it's going to buy this stock or option at this price. Or if I go and I put limit, then I can say, hey, I don't want to buy it for $2.99. I don't have that much money in my account. I rather buy it when it's $240. And I can place that order if I want to. If I put day, that means during the day, it's gonna sell. The trading day is from 9:30 to 4. That means at 4 o'clock, it'll sell it. Right? Not sell it at 4 o'clock. If my order doesn't take, then that order goes away. If I put good till cancel, that means that order will stay there as long as it's on my charts until I take it off. I know there's a time limit set for it, but I've had orders in that took place like 3 months out. So it depends on the platform that you're on. And a stop loss is, let's say I'm in this stock. Let's say I own this at 266. And I say, man, if it drops down to $250, I want to get out of it. Then you have to be in the stock or own the stock. And then if it ever drops to $250, if I have a GTC order good to cancel, it'll sell it right then. It'll sell it when it gets to that 250 mark. All right. As long as it doesn't hit that 250, the stop, that order will not be placed. But if it goes to my stop, usually people create stop losses when they're losing or they're taking less money than what they see on that particular page. All right. Hopefully I was able to answer all of your questions. All right. Norman said, my son is interested in this. Do you mentor people? Will pay? Of course, of course. Norman is a legend. Reverend Norman Thomas went to Southwest DeKalb, then Morehouse College, Atlanta native, Decatur native. But yeah, definitely. I do mentors. It's like a regular consultation. It just depends on the hours. Book it through Messenger. Whatever questions, concerns you guys have, whatever y'all want to talk about, whatever you want to learn, I'm there for you and I can guide you on what videos to watch also that can also further your education in this particular field. But definitely, I love the kids. All right, we already looked at Tesla. Someone said, if you can't afford to buy strikes at the 200, is it more worthwhile to buy a cheaper option with a lower delta or do verticals? All right, yes and no. Please do not buy cheaper options because don't buy options because you can't afford. If you want to go cheap on an option, you buy a vertical. So what do they mean by that? All right, let's say I wanted to buy a call option on on uh on the queues right now, right? And I look up and I see that it's 120. Let's go out one more week. Let's say options guys is just buying stock, like you get like 100 times the leverage. Look at all this volume. Let's say I don't want to pay $175 for an option. And I'm like, Joel, I only got $60. Instead of going down here and buying a cheaper option, which is what a lot of you guys do, stop doing that. If you want to buy a cheaper option, then make this single into a vertical, and voila, that 175 just went down to $49. It's going to cap how much money you can make to the upside. And if you want me to go into detail on how to do this, book a consultation with me. But that's how you do it. Please stop going out of the money to try to buy a cheaper option. That's how you lose. Unless you're getting in and out the same day. But again, that's a strategy that I don't recommend unless you talk to me so I can explain to you how that actually works. Somebody said verts. So yeah, you want to do verticals, or verts might be a stock. I don't know, but verticals is what you want to do. Yeah, I don't see verts, so that's not a stock. All right. Someone asked about SOXL, which is a semiconductor company. All right, guys, semiconductors is what you watch to see what the market is about to do. Semiconductors are the new transports. What do I mean by that? We watch the transports because the semiconductors are in everything. Semiconductors is in all technology. Your phone, it's in cryptocurrency, it's in electric cars, it's in driverless vehicles, it's in everything. Anything that's technical needs semiconductors. It's the heart of all technology. So we watch it to see what the market's going to do. Everybody knew that when this 200 days started to turn down, not only did the semiconductor go down, semiconductor market start going down. And you remember that March, April area where I said that's when the market started to turn around? The stock market started to turn around. The semiconductors have been leading everything else. All right. So Looking at the charts, just like anything else, if you were looking at it for 10 years, yeah, the bias is going to be up, right? Even though this is starting to flatten out, which is not good. But for the most part, it's been going up. And if you want to look at pure semiconductor companies, you pull up something like an Nvidia to kind of see what its charts are doing. So Nvidia is showing you a big spike. If I was looking at AMD, big spike. If I was looking at something like Micron, I want to see it. I want to see what's going on. If I want to look at Intel, I want to see. Oh, look at Intel. Intel is the only one that's aiming is going down. That means if you see Intel going down on the weekly chart, there's no reason why you should be in Intel, people. I don't care if you work for the company and you got insider trading information. This is telling you that money is flowing out of it. So be careful. Sorry, I didn't spend as much time as I wanted to on SOXL because I'm running out of time. Somebody said, Happy holidays, Joel. Best wishes for you and your family. Back at you. Thank you for confirming that for me. I reached out to my rep to pause investing, but continue to deposit funds to build up cash. He didn't like the idea. Yeah, there's nothing wrong. And tell your manager, look, when the volatility index in a down market, you want to keep investing. When the volatility index hits 30, you want to go all in when it's 50. There's nothing wrong with sitting back and waiting for the market to start to turn around. There's nothing wrong with that. But I want you to continually, consistently be investing in the market. Okay. When I get when I get mine, the first meal, I'm gonna break you off for real. Nah, you don't have to. Just invite me out to golf, guys. Just invite me to those expensive, courses, and that's all good with me. I don't want any of your funds. I want you to continue to invest in yourself. I stopped trading for months. My portfolio is bloody red, but I'm finally ready to get back in the game and make my money back. I know what to do. I just have to trust myself and the charts. Definitely. And I'll help you with it and help and ask the room. I don't see you guys doing that much, right? Because so many people will try to bite your heads off, and I'll come in there and referee. If I see somebody trying to come at y'all know I'll come in and try to save you. But if you have a question about a chart, or anything, guys, just go into the insider trading room and say, guys, this stock looks really, really bad. Can somebody create a chart for me just to see if, what I see is what I'm feeling? And then you can hear points of view from multiple traders or investors in the room, and we could talk about those particular stocks. We used to do that when the market was going up, and now that the market's going down, everybody is quiet. So I want to try to get that activity to go back up. All right. Someone said I've also just been adding cash and not buying anything except my long-term stocks at really important weekly levels. Great. Weekly levels means that they're looking at a weekly chart, right? So, right now, if we were looking at Intel looked like a perfect investing strategy all the way up until here. Once that 200 weekly starts to turn down, guys, stop buying at the weekly 20-day. Look, it worked. I get it. It worked a million times. It worked a million times in a row. But once it starts to turn down, it becomes the opposite. It worked here. It worked here. It worked here. It worked here. Let's go back to, because I didn't spend too much time on SO. What was it? SOXL. Let's look at XOXL. Same thing. It worked. It worked every time we hit this 200-day, 200 week. It even is working here. But, you want to kind of be careful and kind of see what's going on. Yes, the 200 weekly does have some support right here. Right? So at least you know where it can go to. It can go down to $4, guys, from 9. That's a 50% drop. I see cats throwing 10,000, 15, 20,000 in these semiconductor companies. Guys, it can drop 50% from here and still be bullish. So be careful. And you're careful by watching what's happening on the 200-day. 200-day is, I mean, you should have known to maybe stay away until it either hits here, or if you want to keep investing in something like this, wait and see where when the VIX hits 30. If you have a downward facing 200-day and you want to buy, even though you think it can go lower, then you say, what would Joel do? Well, Joel says if I want to buy something in a bear market, Joel is only buying things in bear markets when the volatility index hits 30 or 50, period. In a bear market, you're going to get 30s, and that's why it's a bear market in the first place. I might as well wait until it hits 30 or 50. Wait. Or you can throw a trend line on there. If you're really good with charts, you can throw a trend line there. Or you can, if you want to take trades on it, you can take trades to the upside during a bear market. Look, it broke this trend. The 513 cross, you could have bought it thinking that maybe it can go to the 200-day, but you can't be surprised when it doesn't, because in a bear market, the bias is down, it's not up. So up moves are going to be a lot harder to make than down moves, okay? All right. You had a Facebook user that said, "What's up, Norman? Chapel Hill and SWD." I forgot he's the principal over there. So you chart and trade on Thinkorswim? Yes, I do. I save everything on my Thinkorswim platform. This is my almanac for all things. This isn't where I invest though. I have a Fidelity account that I do all of my investing on. My 5-year or 3-year trades I might do on something like an M1 Finance, or I might be dollar cost averaging crypto. Like I'm buying Ethereum. I'm buying a lot of Ethereum right now, but I'm buying it in small increments, like $100 every 2 weeks, or I take a percent of whatever I make when I'm trading. All right, and then I do all of my trading on Thinkorswim. Okay, just in case you wanted to know how I was set up. BM Wash said, "I don't." I told I told I told you I don't golf. I race. We can do that. Better take that money from me. That's hilarious. All right, guys. So, like I said before, I got through everybody's stock. Let me make sure I did. I got through every single stock, like I said I was going to do. But I'm coming to you guys from Decatur, where is greater, and I'm out of here. Hopefully, y'all learned something today. Peace out. Happy holidays, and I'll catch you guys later.